they did rebrand as .ai, so that's got to be worth $1 billion right there.
That's at least $1 billion.
Yeah.
Oh my gosh.
A big thing to look at too, we're talking here about very innovative technology, and for most of us, like including myself, it gets hard to necessarily like comprehend what exactly the technology is doing. And we hear a lot of these buzzwords and we hear a lot of these good promising opportunities laid out in front of us, and like they said, they got alert detection and AI vision, and they're using machine learning. These are all promising things, but what does it mean and how do we
market
make sense
cap?
of it?
It means market cap, baby. That's it.
All right, welcome back, everybody. This is the 13th episode. 13 is a lucky number for me, so hopefully it is for the pod as well. We got a full cast today, which is exciting. It's Trend Tracker, Mr. Fundamentals, and of course myself, Small Cap Kev. And lots has happened recently. Reddit has filed its S1, SoundHound reported earnings, and we've launched a premium newsletter. Pete, I don't know if you saw this, but Reddit is up to over $200 million in deals for its data. What do you think about that?
See that? That is me patting myself on the back, Kev and Declan. I told you it was worth something. When we first talked about this, I didn't know Google was one of the first ones there. And when we kind of followed up on that, I thought that was super exciting. And I hope you Redditors are getting some of those shares that they promised you, because you all are working on training might be one of the best machine learning models out there. So I think this is just the start. Again, me and Declan might go back and forth on what a proper market cap is for their upcoming IPO, but that data is valuable.
Definitely valuable, and that's 200 million over a couple of years. I was surprised that it was Google that ended up being the mystery buyer of, I think it's 60 million a year of that. So let's see where they go from here. The other exciting announcement I mentioned is that we've launched a premium newsletter for the first time. This has been maybe 6 years in the making. We've built a lot of infrastructure around the team to make this happen, and we're finally launching it, and we're excited. So, Declan, your alter ego, Mr. Fundamentals, is really leading the charge on this. Do you want to give the audience just a quick 60-second summary? What's our process for choosing stocks for the Edge Picks report?
Mm-hmm. I'd love to, Kev. Yeah, so the Edge Premium newsletter is your chance to unlock exclusive insights into the growth stocks trading below 10 billion. We've been working hard to deliver a variety of new investing content. And so this includes analyst stock picks, and you'll get a monthly report that comes out with 5 high quality picks under 10 billion. We also have a quarterly growth stocks report that'll give you insights into the broader growth stock market, as well as macroeconomic insights. We'll also do bi-weekly deep dive, that focus in on one of the companies either discussed on the pod or one of our reports. And these will really give you in-depth insights into those businesses and what we think of the valuation, the future prospects, etc. On top of that, you'll also get a significant discount to our industry report, which right now we are in the process of releasing this 2024 State of AI report. And this will cover over 8 markets and 50 AI companies for you to explore. And then lastly, you'll also get a chance to receive weekly reports on the pod that cover greater in-depth insights into the businesses that we have explored throughout these podcasts. So this is our chance to give you more content and allow you to really understand our investment process. And when I speak on that, what we're really talking about is we spend considerable time looking at the financial statements, investor presentations, and trying to assess those future prospects to make a smart investment decision. As a token of our appreciation, we want to offer this newsletter to you at a meaningful discount right now. And if you act within the next week, you can take advantage of this opportunity and be one of the first people to subscribe. So really excited to get things rolling and just start pushing out more content for all of you.
I wish we recorded you. We could just turn that into an ad and run it on Instagram.
Yeah. I think we know who one of the bigger contributors to the new premium newsletter is. So thanks. Thanks, Declan.
Thanks,
yeah, we
guys.
want you guys to be as excited about this as us, because, simply put, we're excited about this part of the market for a few reasons. One, when we're looking at industries like commercializing space, or back in the day when it was psychedelics, shroom stocks or cannabis stocks, the big investment banks and like these typical mainstream media don't really get to this stuff very quickly. It's complicated. It took them a long time. They still haven't figured out cryptocurrency and how to properly cover it and regulate it. Artificial intelligence, same thing right now. So we focus on these areas that it's just hard to find good research. And we do provide a very fundamental approach to this. So we're not just going to be sending you out a newsletter of flyers that may or may not work, who knows, pie in the sky kind of ideas. Like, these are really fundamental businesses. We look for good valuations. We try to find companies with good cash flows. We will take flyers on companies that maybe are pre-revenue or low revenue if we truly think they're in like a game-changing industry and they have a position where they could really capitalize on it. But this is really going to be a fundamentally focused newsletter in a part of the market where we're not looking for, 8 to 10% gains. If something has potential for less than 100% return, we're probably not interested in it. We are looking for those big risks, but we are looking to kind of really manage that risk, not just through diversification, but through sound fundamental analysis, cash flows, proper valuation metrics. So we're excited about that. Honestly, we're giving this stuff away for free virtually at this point. Like, we're not getting rich off the V1 launch of this, I'll tell you that for sure. This is going to be something that's well over $1,000 in value for the year. If you want 12 months of edge picks, if you want 12 months of deep dives, if you want all the reports on when we individually buy and sell stocks, how much we paid for them, we give you alerts in real time. And then on top of that, our AI report, which is an absolute beast. We'll give you a sample of it for free. That's our teaser to you. That's coming up, but it's an absolute beast. So we're giving all this away for $100. Like I said, we're not trying to make money on this. We're not trying to be greedy, but it is important that we get some level of payment because you are 10 times more likely to use it, just statistically speaking. And that's what we want. We want you to use it. We want you to tell us what you like, tell us what you don't like, and give us lots of feedback. So our links are below for the newsletter and the free and paid newsletter. We'd love for you to check it out. And if you have any questions at all, let us know. Comment below. We respond to every single question. So there you go. That's the newsletter. We're excited. Today, though, we're going to discuss a few things. Number one, piping hot small cap AI stock, BigBear AI. They have a recent acquisition of Pangiam. Next, we're going to dig into a military-oriented mid-cap stock that's crushing it on the back of an increasingly war-torn world. Finally, we're talking about a dog-themed altcoin that's up over 100% this week. And no, it's not Doge. So if you're new here, we do this every Thursday. We post this every Sunday. So let's hit it. Topic number one, BigBear AI. It's been in the news every year. You can't miss it. They just completed the acquisition of Pangiam. BigBear AI, they're an $800 million small cap software company with a focus on big data and AI, specifically in the verticals of supply chain and logistics, cybersecurity and autonomous systems. They've finalized their acquisition of Pangiam. We'll get more into that. What Pangiam is, though, it's a website that's primarily stuffed full of buzzwords that are very hard to understand. It's quite extreme, vague descriptions of what they actually do. But from what I can tell, it's a company heavily focused on security, facial recognition. The founders come from the world of customs and security, to give you some kind of idea. So a few key points about this thing before we dig into it. Number one, the acquisition will aggregate some pretty advanced technology, including facial recognition and image-based anomaly detection, to really form a comprehensive vision AI portfolio, as they're calling it. If you're not familiar with the term vision AI, it gets thrown around a lot. Imagine AI software combing through videos and images to look for patterns and detect suspicious items, recognize faces, things like that. Finally, see if I got this right, Mick Kalinin, former CEO of Pangiam, he's going to stay as the president of the combined company. So Declan, I'm coming over to you first. I want to dig into the Pangiam acquisition a fair bit, actually. So Declan, how do you think this move will impact BigBear's position in the market, especially considering the expansion into new sectors like travel and digital identity?
Yeah, so BigBear AI is a large data analytics company. They essentially are trying to turn raw data into actionable insights. And so when it comes to Pangiam, they are essentially leveraging that AI vision technology, as well as being able to really make sense of these key markets where, say, like you said, airlines, that there's a lot of security concerns and a lot of emphasis on trying to protect people who are traveling in and from countries. And so when it comes to this business, I think the synergies bode well. There's definitely, like, BigBear AI will benefit from Pangiam's technology and be able to just really enhance that side of the business. I know a big area that they've really wanted to step up in is autonomous systems. And so right now, I think autonomous makes up just 2% of the business's revenue. And by being able to tap into these new tech, they're going to essentially be able to really operate fully software-based model that can oversee and ensure that these environments are behaving well, that there's no bad actors coming into the place. And then on top of that, the company also really benefits from their new CEO, or sorry, I should say president coming in from Pangiam. And he has a long list of accolades and a really extensive resume. You know, like he was working for the Department of Homeland Security. He was with US Customs and Border Protection and a lot of other like government roles. And so from that standpoint, I think he's going to bring a lot of insights in how they can leverage and advance this business. Now, on the other hand, what I'm not a big fan of is the fact that BigBear AI is purchasing this company with all stock. And this is obviously going to dilute shareholders. And so, sure, maybe there's benefits, obviously, from an IP standpoint and how this technology will be integrated into the business. But if the customers or sorry, shareholders are heavily diluted from this, and as well as we will probably get into BigBear AI's financial situation, that this could be quite harmful to shareholders over the long run. I don't know per se right now. It's tough to tell. But I think when it comes to the tech itself, it's promising. It's just a matter of like how the actual deal was structured and if BigBear AI is in a financial position to actually benefit from it.
Yeah, interesting take, Declan. I think I agree with you on some things, but the public float of this before this deal was only 50 million. So insiders and shareholders, and assuming most of these people, this new $54 million acquisition, are actually going to be locked up for a bit. And this was originally a SPAC as well. So I do think the cap table is probably a little convoluted. And, you know, if people in the comments want us to do a bigger deep dive into the cap table, I'm happy to do so. And we can actually look at, you know, the terms on this deal. But you got to figure, you know, Kev, 90% of people are going to be locked up on this. I don't think there's going to be a lot of liquidity. And I think even with that 50 million public float, it's pretty tight when you think of it in terms of how many outstanding shares they had. And they repriced the deal. It was initially 70 million in November. So in the year of failed acquisitions and repricements, we're seeing something that went definitive, but it did get repriced. Biometrics and facial recognition. So I think a lot of that was interesting. I was surprised to see that news come out and the deal get repriced where it did.
And I think you're both right. So long term, you know, Declan, I think you're right about a deal, you know, like this is going to cause a fair amount of dilution, which is obviously no good. But Pete's right as well, where in the short term you can expect pretty much all of those shares to be locked up. Sometimes they'll allow for a little bit to be unlocked at the beginning. It's usually like a 3+ year drip of it becoming available. So I think that's something that's maybe not a problem today, but it could be in the future. So we would have to see if this is a long-term accretive deal to the company. It's tough to say. Something I found interesting, since we're talking about the size of the float and all of that, 19% of the float is sold short. So that's actually a pretty abnormally high short position. So I haven't taken a moment to look on Reddit, but I'm sure those guys are having a frenzy looking for a short squeeze there. So there is that potential, a possibly limited float from this acquisition plus an increased short position. So there could be some squeezy positions. However, they'd need to come out with some pretty blockbuster results to get that trending in the right direction. And they actually just reported, I don't know if you guys have seen yet, they reported maybe an hour ago, like just recently. And it's certainly not a blockbuster statement by any chance.
So it's not. And the after hours trading doesn't look like it likes it. So
what's it saying? Minus 21%. Ouch.
Yeah. So I think people were I think they were obviously trying to time this news with the acquisition. It's been in discussion for a really long time on the same day that they're releasing earnings. So I certainly saw a bit of an opportunity for that short squeeze, but it was really going to depend on these earnings. And it was not something that the market looks like they're liking. Granted, after hours volume is going to be the volume we're going to see tomorrow morning. And maybe some people are going to cover some shorts and get out because this was, you know, fairly big news, and earnings weren't great, but revenue's going the right way. So, you know, and they did rebrand as .ai. So that's got to be worth $1 billion right there.
That's at least $1 billion.
Yeah.
Oh my gosh. Yeah. Well, I like a big thing to look at too, and obviously, like we're talking here about very innovative technology, and for most of us, like including myself, it gets hard to necessarily like comprehend what exactly the technology is doing. And we hear a lot of these buzzwords and we hear a lot of these good promising opportunities laid out in front of us. And like they said, they got alert detection and AI vision and they're using machine learning. These are all promising things, but what does it mean? And how do we make
Market
sense of
cap.
it and
It
stuff?
means market cap, baby. That's
It
it.
means good news flow.
I mean, market cap correction, maybe. I don't know.
No,
It's
no,
just
no,
like,
no. Those are all the words you want to hear.
well,
Yeah.
it's just, I think, again, it always, like, I think where I find grounding in a business like this is just then looking at the fundamentals, and it's a company like Big Bear AI. I'm pretty sure it's like existed for like over 30 years. It hasn't, like, it's not necessarily a new company. Maybe they rebranded it, and then obviously like through their SPAC deal, they changed that. But this is a 30-year business that has really struggled to grow revenues and is not profitable yet. So that makes me ask the question, like, why haven't they been able to turn the corner? They list that they have over 20 military contracts and over 160 commercial customers. And so when I look at that, I just, questions come up in my mind, like how have they not been able to turn the table, and what is the backlog? And then why, if they think that Pangiam is such a big value add to the business, why didn't they take a different route? Now, if you look at their financial position, and I didn't get to look at their most recent report, but they lost over $100 million in operating income in the trailing 12 months, and they only have about $32 million in cash. So they're in a cash light position. And if this deal, like I feel anyways that they're really trying to bank on this turning it around. And even in their investor and presentation, they lay out some really ambitious goals. Like I said, they want to really grow their autonomous unit to like 42%, their cybersecurity unit, all these other different facets that currently do not dominate their revenue breakdown. And so you're banking a lot on really fast growth in a really short period of time. And you better hope that this business is going to be able to have enough cash to meet those demands that they've let out for everybody. So that's where I just put some hesitation towards this anyways.
Well, Declan, I've actually got a trick that might help you guys out. When I'm looking at small cap companies and looking at the revenue that's forecasted, in this case, they seem to think it'll be $195 to $215 million over the next quarter. So when I take a CEO forecast like that, what I like to do is I just write it down on a piece of paper, and then I get it in my right hand, I crumple it up, and I throw it in the garbage can, because they're almost never accurate and completely fairy dust more than anything.
You are absolutely right there. But I think, Declan, is something else I realized. This company's been around since 1988, and they've been in supply and they've been in logistics and these other areas. Yeah, I can't believe you're going to make me say it, but there's one thing they've had since 1988, and that's data that they can now monetize differently than they were able to previously. And I think they obviously needed a pretty robust cash injection to kind of hit some of these goals, which is why they probably took an unfriendly SPAC deal. I mean, this the SPAC was probably around $10 within a year. I think went down under $1. So they're
Ouch.
the only thing, though. I think there's still people holding from there, right? So there's still some people there. It kind of might want to see it get closer to that level. And then the other thing that, I had to take a look at when I saw it dip down to that level is, okay, who are some of the bigger players? And, I want to let you know some of these things. So from 6 months, in a 6-month window, BlackRock increased their position by 34% and owned 2.7 million shares. Vanguard increased their position by 128% and own almost 2 million shares. State Street Capital increased by 56%. Morgan Stanley increased by 141%. So there are some institutional players that are in this. And, it is something that could benefit off of the Department of Defense budget, which I'm sure we're going to talk about on our next topic, but that's a near $1 trillion budget. So I think there's some things here that could be interesting, and certainly some things that I want to investigate a little bit more myself.
Pete, I'd be curious. I'm wondering what the timing is of these institutional buys, because you look at the last, I guess, month, 2 months, and it's just seen some extreme gains. I'm curious if the institutions are buying before that. Are some of them gone by now and maybe haven't reported? I'm not sure on the date of those. stats that you're looking at?
So sorry, I was referring to ending on their SEC filings. So that was quarter 2 ending 2023 versus quarter 4 ending 2023. So
Right.
March numbers wouldn't be ready yet, but that will be kind of be the next interesting ones to check out. But they were building a pretty strong position in Q4.
That, or they were just loading up beforehand and then and selling it to retail investors that don't know what the word valuation means.
Correct. I mean, I guess I
Well, we'll
wouldn't
see.
put
We'll
it
see.
past institutional investor to know something before a retail person. But hey, you know.
Yeah. Shocker.
I am gonna push back on that note just a little bit here. Like, I think it is obviously validation that these big institutions are buying, but on the flip side, like 90% of professional investors fail to beat the market, and it's tied to these institutions. And so I have it's important, I think, to watch these bigger players and see where they're going, but it's also important to like watch what investors are buying and which investors those are. So this is my personal preference, but I would prefer to like watch people that perhaps have like a highly fundamental approach to their evaluation, whether that's people like Monish Prabhai, Bill Ackman, Bill Miller, some of these like renowned investors like that. And if I saw them give that validation, then there's no question. But I just know that like BlackRock, for example, pretty much owns every single company in the entire, like in the United States. And that extends to Morgan Stanley, JP Morgan, all these businesses. So it's not necessarily like a vote of confidence per se, because they dip their toe into everything. So I like, to your point though, I think it is important that there is this validation by these businesses, but I would just be cautious of weighing that too heavily when you're assessing a business like this.
Yeah, I mean, I'd be interested to actually do the math, but I imagine, whatever 5 to 10 million they put into this company in my personal budget might be fractions of pennies. I don't know. What would be the math on that? On the how many trillions they have under assets under management. So no, it's not the biggest play, but the fact that I like seeing all of them up their stakes, and granted they were getting it at a good price, and it was easier for them to follow the news of the initial acquisition, and they also could have been the ones. I didn't check if they were actually working on brokering the deal themselves, where they could get an upside on that tends to happen. So it's not the only thing I would evaluate it on. I'd say .ai is likely more important, but it's something to keep in mind of. And just that they are delivering a little bit of what the CEO initially said. She came over from IBM. She was brought in because she knows the space, and that she was here to diversify a suite of products. You said, they're not necessarily hitting some of those things they said they would. It's not necessarily easy to just do in, the year I think she's been around. But she's delivering on it with this acquisition that is delivering on a promise, not utilizing some of the cash to dilute investors, but they have got, real contracts as a company that's been around for a while. So I think it's definitely something that's going to remain on my watch list.
The new CEO is quite a good speaker too. She's quite compelling. Like, she seems to have a decent plan of action. And the way she puts it is that there is a bit of a right sizing of the ship going on right now. If you look at the latest financials, for example, I know you guys said you might not have had a chance to see it yet. So just to keep a couple keynotes, the net loss for the quarter was 21.3 million. So slightly lower net loss versus last year, but still a net loss company at the end of the day. They're predicting almost 200 million 200 million revenue for the next following year. So depending on the market cap of the time, it's 3 to 4 times sales. So not crazy expensive for an AI company, but then as soon as you get to the net loss, it's not quite as compelling. I'll make 2 points. One about the institutional buying. Thinking back on my days when I was in the institutional world, it was interesting to see what you're saying, Declan, where the goal is, generally speaking, at least at large pension funds, is pretty much to mimic large benchmarks and then take tiny over or underweight positions on those stocks. So they will own the exact same stocks, but they will go slightly tilted to have a higher allocation or lower allocation, depending how they feel. And I know that because they would complain endlessly about certain stocks like Valiant Pharmaceuticals, for example, how much they hate it, but they would have to own it because they couldn't risk deviating too far from the benchmark. But they were actively taking an underweight position. So that's point one, to say institutional buying isn't everything. But point number two is, as somebody who works in investor relations and has tried to get institutions to pay attention to small cap stocks below, $500 million market cap, which this would have been roughly when they're making their buys, it's extremely hard to do. So to get any name brand institution to buy a genuine small cap stock does actually show something, because a lot of their benchmarks won't necessarily include this. So lots more to dig into. It could go either way, but it's interesting how, again, in this, you're both right on this. It depends on more context, which I'd be curious to see. I would have, if I had to choose, I would have probably taken the sides of the shorts. Easy to say now that we know the stock price is coming down, so I'm not going to give myself any award for that. But the only reason being, looking at the massive surge in interest over the last month on seemingly not obvious reasons other than it being a trending AI company and still losing money, I wouldn't have been excited to buy this stock at that valuation. And as we're seeing now, it's kind of coming true. It's down 20%. I think it's going to be going lower than that. So remains to be seen. And at a certain price, I would actually consider jumping in on this stock, because there is a lot about this to like. So I have no further thoughts on that stock. Do you guys either of you have a final thought before we move on?
Just one final point. I think, like, just circling back to your comments about the CEO, it's always great when a CEO is transparent and outlines the current landscape and ultimately is under promising and over delivering. And so I think by setting the expectations low, it's very important and could also benefit a company like this. But I just wanted to bring to note one final thing that I found while like digging into their financial statements, and that's on their investor presentation. They outline and they confidently tout that they reduced operating expenses by 70% and recurring expenses by 35%. Now, from a recurring standpoint, that is fantastic. That's good to hear. But I think it's a little misleading what they did say there, because when you actually like dive into why their operating expenses were so high in those quarters that they refer to, it's because they had a non-cash goodwill impairment charge, which is essentially like they've essentially outlined that they have this much goodwill and they valued it. And whoever the auditors came back and were like, no, that's not how much this is worth. And you need to make this adjustment. And so that's where that spike in operating expenses climbed, is because of those. They had two of them in not consecutive quarters, but I think it was like Q2 2022 and then Q4 2022, something like that. But it's just, I always like kind of get the ick when I see a management team that like is like bragging about results that aren't necessarily due to them doing anything to really improve the business, but more so because of the fact that they had something that was incorrect and they needed to fix it. Otherwise they'd get slapped on the wrist heavier.
Fair enough. And you might be one of the first people commenting on finance and pubcos to use the word "give the ick." So that's great. I like it. That's very, yeah. I know we've been on this for a while. I do want to just bring up, there is a geopolitical play here as well. And I think we have to acknowledge governments are required to invest in AI. And we are in a bit of an AI arms race. And, if you look back to the Cold War, where governments had to load up kind of on nuclear weapons, that they were relying on their own technology. You can't share that technology. You can't be buying it from other people. They need to find a domestic source of quality AI that comes kind of with those defense guardrails that they haven't shared with other countries, because governments are going to be forced to buy into this. And that's not without its downside, right? Because when you're thinking about the USA themselves, this is a company that was built off of freedom and built off of privacy. And now they're competing against other countries that do not have that respect in terms of, maybe a China whose, privacy restrictions are vastly different from that in the United States. So how does, a company like this compete? But the government has to do something to invest domestically to keep up, especially where the geopolitical landscape is right now, with, the odds of a major conflict increasing daily.
Mm-hmm. And Pete, you gave me the best segue ever, because the next stock we're going to talk about is, again, directly related to wartime profiteering. This is AeroVironment. They just reported their third quarter revenue and they raised their fiscal year guidance. If you're not familiar, AeroVironment, I don't know why I found that name to be a tongue twister. AeroVironment, a $5 billion mid-cap stock. They're a global leader in robotics and unmanned systems. They just announced fiscal 2024 third quarter results. We're talking record revenue, 186.6 million. That's up 39% from the same period last year. They also raised guidance for this fiscal year to between $700 and $710 million. So another earnings beat. This is a company that has a history of doing this. Obviously, they benefit immensely from conflicts in the Middle East and Ukraine, obviously, and elsewhere. A few key points about this. Record Q3 revenue is driven by significant growth in what's called their Loitering Munitions Systems segment. If you're like me, you don't know what that means. I looked it up for you. And some of these words, I actually don't think I can even say on YouTube out of fear of being flagged. But just imagine gigantic drones that cruise around in a certain area, aka loitering. And when the time is ready, they drop to the surface and boom, boom, pow, boom. Final point, their gross margin increased to 36%. Due to a higher product margin and service gross margin. So here's a stock that seems to be firing on all cylinders, pun intended. It's of course nice to see gross margins improve to 36% and a profitable quarter, even more importantly. Pete, what is AeroVironment doing to get that margin moving higher? What do you know?
I think they need to get it moving higher because the CEO loves talking about this impressive backlog of orders they keep having. But if you cannot sell this profitably on a gross margin in this industry that's incredibly research heavy, you really don't have a future. You're going to run out of money. So the CEO can talk about this backlog all he wants, but if he can't figure out a profitable way to get these drones in the air and then crashing down somewhere, he doesn't really have much of a future, even with that great backlog of revenue. I think they really need to double down and figure out operations that, one, can clear out your backlog. Stop talking about all these great orders, get them out and get people paying for them. And two, do it profitably.
I think that's a big point, or a good point, sorry, that it is important to get these pieces moving forward and get them actually out to market. The big thing here is that I imagine with such close ties to the US military and likely its allies, there is an expectation to roll these things out over an extended period. So that's my understanding of where the backlog might come from, is that they don't necessarily want to push all the supplies to the forefront right away. Obviously, like we've discussed already a bit, and we will soon discuss further, is that there's a lot of conflicts on the rise, and we're not exactly certain where we should allocate all this capital. And when I say we, I mean the US government and its allies. And so we're really trying to hone in and then also find a way that makes sense to not like overstep one direction or the other when it comes to one of these conflicts. And so I think when it comes to that and where the business lies, there is a lot of tailwinds benefiting them. And I would expect that because they've been in this industry for quite some time, that they have a good understanding of how they should be moving inventory and the development cycle of these types of products.
Mm-hmm. Generally speaking, if we're looking at a stock or any company that's reliant on a small number of customers, in this case the US government, or if we're looking at a company that has potentially lumpy revenue based on seasonality, like a ski hill, for example, I look at these guys and I think, okay, well, revenue is directly tied to global conflict. So on the one hand, high customer concentration risk with the US military, but also very lumpy revenue because an announcement out of Ukraine and Russia, some kind of ceasefire, would be great news for the entire world. It would be bad news ultimately for this stock. What does give me some level of comfort is, sadly, it doesn't look like global conflict is ever going to disappear in its entirety. There seems to constantly be, rolling from one conflict to another. The US seems to always be involved for one reason or another. This is a company that has showed, in spite of those concerns being brought up by analysts and spectators on YouTube, even following the stock and having that same criticism, it seems to be every year they are beating earnings and growing their contract sizes. I think this is comparatively a small company, $5 billion market cap. It's, on the larger size of what we cover, but in the grand scheme of the world, it's a small company. And the US government military spending is absolutely gigantic. And it pretty much seems like no matter who gets elected into office, does not seem to be decreasing at all. If anything, I'd have to look into that further. So that gives you some comfort, but you do have to keep in mind the risk of potential world peace being a significant negative impact on the stock. So you'd want to buy it at a reasonable valuation. If you look at what they're forecasting for revenue in the current market cap of the company, it's about 7 times sales. So certainly not on the cheap side at all. But though we are paying a higher premium for this versus a company like BigBear, for example, like we mentioned, this is a profitable company with serious, significant revenue and really, really deep ties into a big customer. It seems to be a better company, but you're buying it at a much higher valuation. That's a major downside.
Yeah, I think you missed a lot of bigs when you were talking about the customer and with the Department of Defense and their spending. Maybe I'll read out 3 numbers for you guys really quickly here. 187,317,453, 181,888,089, and 58 million. Those were the top 3 awarded contracts yesterday.
Yesterday.
Oh, so Integration Innovation out of Huntsville, Alabama was awarded the first one I talked about. That was for a contract to design, develop, and deliver self-directed interactive training and instructor-facilitated interactive courseware training products for Navy aviation. BAA Systems Land and Armaments LP out of Sterling Heights, Michigan was awarded the $181 million firm fixed price modification to a previously awarded contract for amphibious combat vehicles. The previous contract was $2.7 billion. The last one was Aviation Systems Engineering out of Lexington, Maryland. So those were just 3 of the contracts awarded yesterday. So yeah, I think if you take your ethics out of investing and you want to throw a couple bucks in flying death machines, it might not be the worst move you're going to make. Yeah, guys, it's going to be $1 trillion last year. It'll be $1 trillion next year. It doesn't matter what happens in the fall. I think the only thing is if we see the other side when they've just asked other countries to maybe chip in the past. So there's still going to be a lot of spending, and we certainly all want world peace, but the U.S. government is going to keep spending money on defense.
Wow. Well, I think we can rebrand flying death machines to like flying liberation machines, flying liberation devices. I think that's a little bit more palatable.
They're both easier to say than the name of the company, Kev. So
how now, brown cow, AeroVironment. Okay. Well, Declan, I want to come to you. So AeroVironment, it's focused on robotics, unmanned systems, and connectivity with big military customers. Declan, how do you see them positioning themselves in the broader market, especially considering the recent financial performance?
Mm-hmm. Yeah, so they have a track record, like you mentioned, of beating earnings and performing well. Obviously, there is some cyclicality to this market. And like you said, if there is such things as world peace or less conflict overall, this obviously would hurt the business, but that is not so much the case today. And when you look at it, like over the past 80 years since World War II, we've kind of been in an anomalous period where there's been relatively peace. There's been a lot of proxy wars and smaller conflicts, but it's never directly affected, say, the United States on its homeland per se, nor most of its allies. And so now we're in a situation where there's a lot of different states across the world that are looking to challenge the US's hegemony and want to potentially have a greater say on the global stage and dictate how things go. Now, a big part of this industry, as well as what the US does in terms of military spending, is in the form of deterrence and defense. There's a lot more that goes or is allocated towards the defensive side of things. And why is that? Because if you can show your military might and demonstrate that you clearly have an advantage over whoever you have a conflict with, it'll likely prevent more scenarios than ever going into a full-out war or not spending at all. And so when I look at a company like Aero, what you're really considering is that they are supplying devices and machines that are helping this deterrent. Obviously, it's not the most glorious market, and there's a lot of destruction and chaos that is tied to it. But the thing is, these businesses are necessary because they are building devices that are ultimately going to protect the interests that are associated with, say, your state, your country, your community, whatever it may be. And so that's where I see this not only being a short-term catalyst, but something that spans well over the long run, because as we are made aware and as history has outlined, these conflicts tend to drag out a lot longer than people would hope for and would expect. And so when that happens, you need to be able to rely on a system that is going to continually give you that advantage. Otherwise, you're putting yourself at risk of losing that influence and being able to have those rights and freedoms that say we fight for. And that's the big thing here is I think they're in a position where they're obviously going to benefit from the certain conflicts, but it's almost necessary. And it's very valuable that in, say, our side of things, that we have these private corporations that compete against each other and are always continually trying to innovate. And like you said, Pete, win these like one and done contracts kind of thing, so that we are bringing the best technology to the table and giving ourselves the best chance to put us in a position that if a conflict ever does arise, that not only are we going to be able to deter them, but also in the case of like Aero, have autonomous systems that don't put human lives on the line. So I think that's where the value comes from. It's obviously like quite polarizing to discuss these things, but it's ultimately like from a business standpoint, they should likely benefit for the foreseeable future.
That has to be one of the best diplomatic responses I've ever heard to any type of military spending. And I think if we clip that, you could be a lobbyist in a week for sure.
You don't want to lose.
That was
Let's not clip that.
I'm sold. Like, no, that was you are right though. There is obviously a responsibility of our governments to spend money on this, and I think you brought up some good points there. That the ability to react also protects. So I think that's definitely a key point. From a business side point of things, I agree with what you're saying, that, you know, even as I read some of these contracts awarded yesterday, you do see, you know, autonomous, unmanned. This is a common thread with the way military spending is going. So they're certainly also in the right area to see future growth.
Yeah, this is an interesting company, and one that may warrant further research on this, because I mean, like I said, you know, there's customer concentration risk, but Pete, as you mentioned, the US government is probably the stickiest and most aggressive spending of the military superpowers. So not really a concern there. And though revenue may be lumpy due to the come and go nature of conflicts, there doesn't really seem to be any end in sight of any of the conflicts going on. And I'm sure as soon as there is an end in sight, we're going to be on to something else. And if we're not on to something else, the US will probably need to restock its own supplies that it's given away overseas. So lots to like about the company. The only thing that I'm looking at is that it's just jumped like crazy in the last, you know, short term, that it's just like gut says, you know, when you see massive gains in the short term on, I'm not going to say not obvious news because they just did another blowout quarter, but there's almost always a pullback after something like that. So my gut tells me to wait a short amount of time to see if there's a better entry point, but I could end up kicking myself. Would I buy it at this second? I wouldn't. I would want to see a little bit of a pullback. And I think that could be as simple as like some positive news out of the Middle East or elsewhere. Like, I don't think it would take much for this to settle back, because we're getting a lot of retail investors looking at this now, that I think you're going to see a better entry point. And I think I'm going to be sitting right there watching and waiting.
Yeah, it's certainly in a position where right now it may look overpriced, and I would prefer personally if their earnings were a bit more stabilized. If you look kind of on an annual basis, they've kind of had like a bit of a roller coaster in terms of how those things have gone. The big thing here that I think a lot of us may not be anticipating or necessarily familiar with when it comes to businesses like this is that, again, a lot of these conflicts are elsewhere in the world. But the moment that it tips the scale, or say like the US itself is attacked, that is going to spur a fury of not only just offensive efforts, but also investment into the market. Like, if you kind of look back at, say, and I'm really pulling from like the greatest conflicts in history, but if you look at World War II, World War One, a lot of these businesses that were focused on different areas of the, like within different markets, doing all these things, when you get in a position where you need to combine your forces, use all your capital, do all these things to give your country and your citizens the best chance to win, you can see a lot more investment go into this market and potentially set it up so that they are just reeling out contracts left and right and being able to supply not only their allies, but all their forces all around the world and really help them have that advantage. So I think it's just important to pay attention that there is, though like sad and unfortunate, that there is an extreme catalyst in the event that somebody like the United States is attacked. So
Well,
I think it's just
one final point on that. I mean, that'll change things entirely. A lot of people don't realize that back in the war days, every company in America had some kind of wartime division. General Mills was in the war business. You know, Chrysler, like, GM and stuff, obviously you'd expect them to be, but General Mills. So when it comes real wartime, people will put their, I'm not going to say put their ethics aside, but their distaste for war aside. And, it's showtime. It's a very patriotic thing. But actually, what's interesting, war, at least on American soil, is actually not the biggest threat to the American economy. There's something that's much more dangerous. And that's actually our third topic. Shiba Inu has soared 146% in the last week, all part of a broader meme stock rally, at the big coins too, actually. This surge has outpaced gains even from beloved Dogecoin, Elon's beloved Dogecoin, I should say. A few key points. The crypto market as a whole, it's moving higher. Everybody's seen that. In the last 7 days, Bitcoin's up 10%, ETH's up 16%. So there's movement across the board. Recent developments, I can't pretend to understand that I know exactly what this means, but recent developments within the SHIB ecosystem, such as the launch of the SHIB name service, SNS, it's contributed to the hype surrounding the coin surge. This provides network participants with new functionalities, kind of akin to the Ethereum name services. Finally, if you're not familiar, Shiba was actually created as a Doge killer. However, there's a few notable differences. For one, Doge is actually its own blockchain, whereas SHIB is built on Ethereum. Doge is proof of work, SHIB is proof of stake. Number of SHIB in circulation is much, much, much higher. So, Declan, let's start with you. I mean, SHIB is seriously outperforming against Bitcoin and Ether. Declan, how do you evaluate the sustainability of this recent surge amidst the broader market rally overall?
Yeah, so after doing some DD on this, I was looking into it, and I understand that they're trying to make SHIB a deflationary asset, and they're offering these different applications on its ecosystem. But upon I just could never bring myself to buying one of these tokens. And so when it comes to this recent surge, again, I always want to ask myself, how does it compare to other assets? Would I buy this over something else? And like you said, Kev, first and foremost, Shiba Inu is built on the Ethereum system. So why not buy Ethereum if that's the main system and that drives all of this? Obviously, Bitcoin is a mainstay as well, so that's great. But then I also wanted to bring to light some companies that are of equal value currently to Shiba Inu's market cap of about $18.5 billion. So if you were choosing a stock over the crypto token, you could buy DraftKings, you could buy Best Buy, Brookfield Asset Management, Formula One Group, or even Clorox, the cleaning company. And so these are all businesses that I personally believe are in a way better position than a meme coin like this that just doesn't seem to have any economic value whatsoever. So when it comes to this rally, do I see it contracting and going back down? Absolutely. And if things go awry in these bigger cryptocurrencies like Bitcoin and Ethereum, it will probably go tenfold compared to what those assets would do. And so, if you're holding on right now, if I was in that position, I would be taking those profits and never looking back, never even considering it again. But of course, I'm a bit critical of the space. So that's my stance anyways.
You're going to get some angry comments and I can't wait.
Yeah.
I'm here for it.
I love
seriously, light them up below. Go for it.
I love the crypto people in the comments. Nothing else gets comments like bashing a crypto coin.
Let's go.
Sorry, guys.
Trend Tracker, you got something to say?
Oh, I mean, I'm with you, Declan. I can't look this up. I was at a casino on the weekend in Scottsdale, Arizona, and I liked those odds better than this. So Yeah, I think a lot of this is some impulsivity. I think a lot of the people that hold this, I do obviously believe there's a group of people out there with very good understanding of crypto, understanding the way it moves, being able to predict the way things go up and down. But I think there's a larger group of people that are impulsive and see this. And, you know, let's say Declan, if Ethereum's anywhere from the 2 to 4,000, it kind of bounces in. It's tough to get 300% growth on it. So I think that's why people are investing in this. And, you know, yeah, you could definitely buy Clorox that's going to be here in 100 years, but you're not going to make 1,000% on it. So I think that's what people are doing. And, you know, I think you have to be careful with the money you're putting into this.
Yeah, for the most part, it's 99% gambling. I look forward to people commenting saying it's not. You know, there's a few things. We will be reasonable, though. It's hard to imagine. It's been 7 years since this all kind of got started when there was the last meme coin heyday. That's when I wrote my book on crypto. And it was a pretty wild time back then. Declan, you mentioned why buy SHIB instead of just buying ETH? Good point. I mean, there's a couple things to say. Is like, one, ETH, yeah, you're buying a piece of essentially the Ethereum blockchain, or you're staking you're not, people will correct me on that, you're not physically buying a piece of it, but you are buying into that community. And then whether it's a project like this or if it's an NFT, it has to somehow run on Ethereum, and in theory owners of ETH should profit. I think the big reason people go for unique coins like SHIB is because there's supposed to be some kind of utility. Like, the whole point of building something on Ethereum is to be able to utilize functionality like smart contracts and build something useful, some kind of app that does a thing, does it well, and it saves you money or makes things more efficient. That's what it's supposed to be. And that's why you'd buy a specific coin, because you want to support, not a coin, a specific token, because you want to support a certain project. The thing is now, what are a lot of the projects? You know, Sponge Coin, where you can play a SpongeBob video game. Like, a lot of the quote unquote utility that you get out of these are in many cases games. So they're not really useful products yet. I think when those truly useful products really get fully developed and have a lot of usability, I think this conversation changes a lot. But for now, I'm with you in the same camp that I'd rather own a little bit of Bitcoin, a little bit of ETH, have that represent a small piece of my portfolio, rebalance occasionally, and just not think too much. I don't see a situation where I jump into an altcoin, but let's play ball. A lot of people watching this audience, a lot of the audience watching this is going to have a different view. And no matter what we say, they're going to go look for some altcoin to buy. So, like, let's just play ball a little bit. Pete, I'm gonna ask you, because I know you're critical as well. I know you're not one to jump into altcoins, but if you had to give some advice, quote unquote, this is not financial advice, don't buy on anything we say, but if you had to give some high level opinion, let's say, what criteria should investors consider when they are assessing like the long-term viability, long-term potential for gains with one of these coins?
I would still say your first criteria is not care about the money you're putting into it. After that, I think there's obviously broader ties to the greater crypto market. And again, what utility does it serve? The valuations are all over the place, but if you can see the utility that it serves, which is why I think we might all like the Ethereum blockchain, which you just brought up, that smart contracts, proof of ownership, these are real utility that solve real problems with instant verification. These are good utility items that people will use. We're just still trying to figure out the value. So if you're thinking of, you know, investing in these things, we've seen correlation to greater strengths and confidence in the economy, the stock market, stable coins. You know, Bitcoin has hit an all-time high. That's going to be better for some of these, you know, smaller coins, meme coins, or anything along those lines. But again, you know, I'd say criteria is be very careful with the amount you put in, and, you know, don't mortgage the farm for it.
Right. And to build off of that, I think, you know, trying to keep an open mind in these markets is important, because obviously they have existed, they've withstood some form of correction in the past. But like in terms of a criteria, like when I was trying to understand this business, I wanted to know like how strong was the network effect. So that includes how many people are holding these assets and what can you use them for, like you said, the utility, as well as is there any businesses in the in the physical world, let's say, that are accepting this. And so surprisingly, I don't know if this is necessarily to date, but when I was looking at or reading into an article, it outlined a few companies that you could actually use Shiba Inu tokens for. And some of them included Newegg, which is like a computer and electronics retailer. Gucci, apparently, at 70% of its stores, I don't know if it's still true, but had let Shiba Inu be purchased with it. Twitch, and then as well as the American Cancer Society allowed you to
Excellent.
make donations on behalf of Shiba Inu. So there, there's a small section of companies that have obviously opened up to it, and I think there is about like 1.7 million wallets on this platform. So there's certainly some adoption, but I just, when it comes to it, like, and especially in terms of those businesses that I mentioned, these are all not necessary like expenditures for the average human. Like obviously you're not buying Gucci unless you have substantial cash or you just want to look really cool. Maybe Newegg, you buy a new computer kind of thing. But in general, if you're in a position where you need to pull cash or be able to use that capital to sustain your livelihood, Shiba Inu is not the token to go with. Maybe Bitcoin makes a case for it. It obviously has a lot more adoption and acceptance more broadly. But when it comes to these smaller tokens, you're really playing with fire when it comes to trying to make a purchase with an asset that most of the people in the world do not see any value in. So it's just, you got to be very cautious. And that's where ultimately like a network effect helps solidify some of these assets. But does that necessarily mean that it's going to be a good investment, or is it even going to be useful for you in the future? It's up for question.
And something you got to keep in mind too is behind these, silly memes and colorful images and stuff is some pretty deep tech. Like it's some serious technology, some more than others. Networks like Doge, they have literally built their own blockchain. That is a very triumphant feat. It is no small task. That's some deep technology. And you look at what they're trying to accomplish, and they are iterating on Bitcoin and making more usable coins. Something people need to keep in mind is the difference between a coin and a token, and what makes one more valuable is different for both. So if you're a coin, ultimately you want it to be deflationary in some way or another. Why is the US dollar and Canadian dollar not something that's excites a lot of investors? Well, it's very inflationary. We're printing money like crazy.
That's
so
right.
If you have a coin, you want to make sure that doesn't happen. It has to be built into the code that won't happen. Number two, Declan, just like you were saying, network effects. It's only valuable if everybody has it. It's the same reason why Facebook won and Google Plus didn't. Both excellent platforms. Nobody was on Google Plus. Number three, it's got to be secure. I could go on, but I'd say those are some of the biggest things. Fungibility has to be the same as each unit. But those are kind of the key things to make a coin usable. And it has to be accepted by retailers. I can't believe Gucci is taking Shiba. We could dig into that another time. But those are the main things that make a coin worth something. Then you look at the token side, it's different. Tokens are supposed to be used for a thing. They're supposed to do something, execute a smart contract, or play a video game and have smart contracts within the video game. Like, it has to be useful for something, and it has to be a genuine iteration on the million of other alternatives that exist. You can't go into it saying this coin is 0.0001 and that coin is only 0.01. So I'm going to go for the cheaper one because my likelihood of appreciation is higher. That's what I see in the forums, and it's terrifying because that's not how it works at all. So I think if people are going to speculate on this, which, like I said, no matter what we say, people are going to speculate on this, try to at least take all of these points into consideration and think about, at an underlying fundamental level, what makes this piece of technology worth more than Sponge Coin or some other goofy alternative. And fine, look, some of these are going to win in the long term. Like, blockchain is a useful technology. It exists for a reason. Just make sure you're understanding, make sure you can be the one to beat up your investment thesis. And if you really can at the end of the day, and there's a technological reason you're holding a certain token or coin, then you can feel better about that. But also watch it like a hawk, because your liquidity can disappear in 2 seconds. That's the end of my rant. Cryptocurrency. Oh man.
Yeah. Well, I think it's interesting in it, and I've really been trying to wrap my head around this. So maybe that explanation on coins versus tokens would help here. But I find it kind of contradicting that these assets are ideally deflationary, where you're going to increase your value. But from a consumer standpoint, what happens in that situation is it incentivizes people to hold on to those coins more than actually put them to use. Because if you expect the asset to appreciate over time, then why would you decide to spend it on something that ultimately is going to be probably worth more in the future? And so that's where I have a difficult time trying to make sense of it all, because sure, on one side you're arguing it's a great storehold of wealth and you're going to benefit from holding on to it. But on the other, these platforms and like Shiba Inu is trying to create all these applications and different things on its ecosystem that encourage you to go out and use the actual tokens or coins. And so where that fits in and what is the stronger case is difficult for me to really understand. And just, I guess, another reason why, per se, I'm probably not the best person to give like or make a decision on a token like this, but it is a question that I think investors should consider when they're assessing these assets.
You know, you made me think of something new, actually. Whereas I said you want a coin that's deflationary. When I think about it as an investor, you would, because like you said, that makes it more likely that the value would increase. But if it's a coin, technically it's supposed to be usable as a currency. So you actually really wouldn't want it deflationary or inflationary, right? You would kind of want it to increase the supply as new major buyers come in to absorb that increase in volume rather than shooting the price higher, because you know you don't want your wallet to be worth $10 one day, $20 the next, then $5 the next. You want it to be worth $10 one day, $10 the next day, $10 the following day. Something that traditional fiat currencies can't accomplish. So that's an interesting point. I'd be curious to see if somebody could program a coin to exactly absorb what comes in from the market while being secure and usable. Yeah, good point. Very interesting.
Well, and just one last point, like to build off of it, like there's a reason why governments or say central banks set an inflation target of some percent. They ultimately, like, yes, a lot of inflation is bad because it destroys your buying power, but some inflation is actually fundamentally good for an economy because, again, in a deflationary state, and this is what a lot of the big economists and investors had warned about last year, was that if we go into deflation, what that means is people are spending a lot less overall, and that doesn't stimulate the economy. So by having some form of inflation, it actually incentivizes people to spend their money because into the future, it's going to be worth less. So they might as well put some of that capital to use in some form or another, because in the end, they're going to have less of it. Whereas the other opposite, people in a rational situation would be looking at it and be like, well, I should probably just hold on to this. I'll be richer over the long run if I don't spend anything. But because that is on the table, people have some form of motivation to actually put it to use.
Good points. Pete, any final thoughts on SHIB? I think we've covered a lot of ground today. We've done pretty good.
Yeah, short of us getting to a very large philosophical discussion on the deflationary effects of coins and fiat currencies, because I do have a lot of thoughts on these. But
I know I was kind of deciding, do we go down that road?
It's a big rabbit hole for maybe another day for the crypto versus fiat currency battle and take down the central banks. No, I think we could certainly talk about it, but I think that's it for me.
Yeah. Guys, this is episode 13, Beyond the Edge podcast. We are here kicking ass as always. I hope you're enjoying it. If you've made it this far, we love you big time. Seriously. We'll be back next week, episode 14. For now, this is Small Cap Kev, Mr. Fundamentals, Trend Tracker, signing out. Thank you, guys.